Alrighty, guys, we have five companies to break down, five stocks to talk about, all of which just reported earnings. So we're going to break down some numbers. And of course, guys, come on, you know the drill. We're going to break down some charts and what I'm looking to do with these stocks. So hit the like button, make sure to subscribe, and get your free stocks from Moomoo, guys. Literally free money. Link down below with at least a $100 deposit. Get your stocks, guys, and you might as well check out the Patreon as well. And with that being said, let's get into it. So overall today, guys, we didn't have the best day. In fact, all the indexes ended up going red in the red. We had the Russell down 1.5%, leading the losses, and we had the Dow Jones down 1.1%, with the S&P and the Nasdaq each down 0.7%. And like I said yesterday, guys, what did I say? We needed a spike in the VIX. Volatility was too low. And lo and behold, today we went up 10% on the VIX. The VIX went up to 14 points, up over 1.3 points on the day. And again, it went up around 11% on the day after being pretty dang close to all-time lows. You guys can see here the VIX hit 1150 a couple of days ago. And on the max chart here, the all-time low is right around, well, 8 to 10 points, right? And we were at 1150. So yeah, we were due for a spike in volatility. And here we are, guys, as we're selling off on SPY, Triple Q, and again, all the indexes went down today. And look, SPY looks pretty good still, obviously, on the 4-hour chart. It looks like we're coming down here towards the 180 moving average, which could put SPY anywhere from 516 to 518, maybe 520. That's where it could be going over the next couple of days if this sell-off continues. And Triple Q could be going down, let's say, maybe to 440, 445, if this sell-off continues here heading into June. So obviously the uptrend is still holding. Nobody's denying that. But look, man, we got a bit overbought. We were literally running up day after day after day, for weeks essentially. We were due for a pullback. Again, as the VIX was down to about 11 points, which is just too dang low, guys. So let me just jump into the stocks here that I want to break down. Number one being CRM, which I'm sure you guys have seen by now. CRM ended up collapsing after the bell as the company reported earnings. Let me actually pull it up here and show you guys. So the company reported $2.44 of adjusted EPS, which beat the $2.38 expected, and sales missed 9.13 versus 9.147 billion. So yeah, they missed sales, beat EPS barely, and guidance has to be the reason why they're falling a bit here. So it looks like full year revenue guidance is around $37.7 to $38 billion, and it looks like that's up 8 to 9% year over year. And let me see here, guys. Looks like they lowered their full year 25 subscription and support revenue growth guidance to slightly below 10% year over year. And let's see, it looks like they lowered their full year GAAP operating margin guidance as well to 19.9%. So there you have it, guys. Looks like Salesforce is at the beginning of a massive opportunity, blah, 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 for our customers to connect with their customers in a whole new way with AI, the buzzword, AI. There you go, guys. But yeah, they missed revenue. They lowered guidance a bit. And there you have it. That's all it takes for this stock, any stock for that matter, to sell off. And now we're down a good almost $100, about $90 from all-time highs, or about 28%. So CRM, Salesforce, is officially in a bear market. Looks like this Head and Shoulders, which is clear as day right now, ended up playing out. And here on the 1-year chart, you guys can see we're right by the 180 moving average now. Actually, no, we're not. We were as of close, but now that we're gapping down massively, 16% after the bell, we're obviously under this 180 moving average now on the 1-year chart. And on the 3-year chart, we're pretty much right by The 180 moving average will open up right around here, guys, tomorrow in this range. That's if we do stay where we're at right now, which it seems like we are. It looks like we will. So CRM, I'm not a shareholder. Are you guys? Let me know in the comments, by the way. But interesting to see this big drop off. And with this type of company, this type of stock, I feel like it's only a matter of time before we do get some sort of bounce back. I'm calling it, guys. It's probably going to take a little bit. We're going to need to let the dust settle, but CRM is on the watch list. And on the flip side here, Abercrombie and Fitch, man, holy smokes. This stock just hit $196 today. It went up 24% on the day. And this is not like it's a stock that was at $100 a couple of months ago. Now it's at 180. All right. I mean, that'd be a crazy gain in and of itself. This stock was under $50 freaking dollars back in September. I mean, holy smokes, guys. It's unbelievable. Back in September, it was $49. Now we're pretty much up almost 4 times from that point. This is not a tech stock. This is not, an AI-driven stock, which is obviously, running the narrative of this bull market. It's a freaking retail clothes store, guys, clothing store, which I should have invested in this, man. This is one of those companies that I should have invested in. I knew people were going there a lot. I knew what they were doing kind of with the business because my wife, she shops there a lot. She loves the store. So I kind of had a little bit of not really insider information or anything like that, but I kind of knew that Abercrombie was hot. It was popular. It was on the up and up again, and I just didn't buy it, man. This stock about a year and a half ago was at $14. Think about that, man. $14 to $190 a share. This is not an AI stock. This is not a tech stock. And we're up 1,000%, which is nuts. So ANF ended up reporting, let me see here, guys. They must have crushed it to go up another freaking 25% today. Kudos to the management team, man. They're crushing it. Adjusted EPS, $2.14, which beat the $1.73 expected, and sales crushed it, $1.02 billion versus $963 million expected. It looks like here, Hollister brand comparable sales. Wait a second, does Abercrombie own Hollister now? Man, I don't even know. I guess I don't know the business as much as I thought I did. There's no way they own Hollister, right? Either way, I got to look deeper into that, guys. But they crushed revenue, they crushed EPS, and, well, their stock is on fire. There's no denying that. This thing, although it's overbought, I wouldn't touch it here. It's looking beautiful, man. It's looking beautiful. So ANF crushed it. CHWY Chewy also crushed it, up 27% on the day. It looks like Chewy ended up reporting. I looked at this earlier. Let me see here, guys. Are we even seeing the numbers here? Looks like adjusted EPS came in at 31 cents, which beat the 7 cents expected. Sales $2.88 billion versus $2.85 billion expected. So they beat EPS, beat revenue, and they're doing a massive buyback. $500 million buyback plan announced. So that's good news, man. The double beat, the buyback, that's pushing the stock up. And the fact that management is doing a buyback, they approved a $500 million buyback. That's a lot of money for a company like Chewy, guys. Their market cap's like $9 billion for Pete's sake. That means the management team probably thinks the stock's undervalued and they want to buy it up here, which is good for shareholders, right? If you're an existing shareholder, which I'm not, full disclosure, but if you are, that's good news, right? So Chewy's on fire, breaking out to multi-month highs. It's looking pretty good, man. If we could hold $20, maybe consolidate there for a little bit, this could be going to the mid-20s. That's where we were back in Christmas time or during Christmas time of 2023. And if I extend this to the right, let me show you guys this. We're kind of trading in this new window right now on CHWY. So keep your eyes on it here. It doesn't necessarily mean that it's going to go straight to $25. But again, as we kind of consolidate a bit, time goes on, we could be getting ready for another big move. So CHWY crushed it. Dick's Sporting Goods also crushed it. I mean, a lot of these retail chains, whatever you want to call them, the retail stocks, they're crushing it, man. Dick's Sporting Goods, Abercrombie and Fitch. So yeah, DKS ended up reporting, let me see here, guys. They reported EPS of $3.30 versus $2.95 expected. Sales $3.02 billion versus $2.94 billion, and they raised their full year guidance for comparable sales growth to 2 to 3%, and they raised their full year outlook on EPS to $13.35 to $13.75. Let's see, revenue, they raised it, or maybe not. I don't think they raised it, but they see it between $13.1 to $13.2 billion. So Dick's Sporting Goods, man, looks like it's about to break out above 225, 230, which you guys can see that was the high, looks like, from the end of March, early April. And I think if we take that out, well, all-time highs are obviously around the corner. So this could actually be, even though it's pretty overbought, no doubt about it, it could actually be a momentum play. If we do take out that 225, 230 level, this could really start taking off. And last but not least, as it's not, like it's not taking off already. I mean, guys, be careful. But again, momentum could bring it even higher. But the last one here, guys, is UiPath, which, oh my goodness, is not looking good. It's down to $12-13 after the bell. In other words, we're down about 30%. Unreal. So UiPath looks like they reported 13 cents adjusted EPS, which beat the 12 cents expected, and sales came in at $335 versus $333 million expected, so double beat. But it looks like here they guide for Q2 revenue of $300 to $305 million versus the estimate of $342 million expected. So their guidance for Q2 revenue is well under the estimate, not the best sign. And full year 25 revenue seen at $1.4 to $1.41 billion versus the $1.55 billion expected. So not looking pretty, guys, in terms of guidance. And now we're in free fall, a falling knife at a fresh low on this time frame. Not the best sign for UiPath, ticker symbol PATH. And we're pretty much, we're taking out the lows on the yearly chart, maybe the 3-year chart as well. Not yet. We're almost at that $10.40 low on this 3-year chart, which is obviously not a good sign. And this stock was once $90 a share. Holy smokes, guys. And again, now we're at $12. So I'm not looking to touch this one at all, guys. It's a falling knife. I'm going to let the dust settle, and we'll see where it goes from there. But overall, guys, those are 5 stocks, 5 companies I'm watching: Salesforce, Abercrombie and Fitch, Chewy, Dick's Sporting Goods, and of course, UiPath. Let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe for more content, guys, like this. And check out the Patreon if you guys want to see me build out my $100 per week Patreon portfolio. And if you want to see me break down charts and ideas throughout the week. And if you want to be a part of the Discord, all of that's down below. The link's right here, the QR code. Or go to stottsrfest.com/Patreon. And with that being said, I'll catch you guys later.